Do you know what the single biggest threat to your financial security is when you are retired or getting ready to retire? It is not just the stock market going up and down. It is the illusion of safety. It is looking for help in places that look like a bank, sound like a bank, but are absolutely not a bank. Right now, so many people are asking a very specific question online. What bank does FloatMe use? You might be asking because you saw an ad promising a quick, easy cash advance to get you through to your next Social Security check, your pension deposit, or your annuity payment. Or maybe your adult children are using it, and you are trying to figure out if their financial information is actually safe. Let me tell you something right now. You need to look at the reality of how these financial technology companies operate, because what you don't know will absolutely hurt you. Let us answer the direct question first. FloatMe is not a bank. Let me repeat that. FloatMe is a financial technology platform, a smartphone app, not a banking institution. To provide financial services, companies like FloatMe must partner with traditional, federally insured banks to handle the actual movement of money and to hold funds. Historically, FloatMe has used automated financial networks like Plaid to link directly to your existing personal bank account, whether that is Bank of America, Wells Fargo, a local credit union, or any other institution where you receive your income. FloatMe also uses clearing banks to route their cash advances into your account and pull repayments back out. But here is where the fear comes in, and here is why my heart breaks for anyone who thinks apps like this are a safe harbor for financial planning. When you give an app like FloatMe your banking credentials, you are giving an outside company a window into your financial life. They look at your direct deposit history, they look at your spending patterns, and they use their own private algorithms to decide if you are worthy of a small cash advance, usually up to $50. Think about that. $50. If you are entering retirement and you are in a position where you need to borrow $50 just to buy groceries or put gas in your car before your next check arrives, you are facing a much larger problem than just finding out what bank a tech company uses. You are standing on the edge of a financial cliff. The real danger here is the cycle of dependency. These apps present themselves as a friendly, modern alternative to predatory payday lenders or expensive bank overdraft fees. They tell you there is 0% interest, increasing your exposure. Traditional banks have strict regulatory oversight, federal compliance rules, and clear legal pathways if something goes wrong. Fintech apps operate in a much grayer legal area. If there is a glitch, if a payment is pulled twice, or if an unauthorized withdrawal happens, you cannot just walk into a local brick-and-mortar branch and demand to speak to a manager. You are stuck dealing with digital customer support chat features and email chains while your actual grocery money is locked up in cyberspace. So, what is the actionable takeaway here? How do we fix this? If you are asking what bank FloatMe uses because you are looking for a way to manage your cash flow between retirement checks, we need to completely shift your strategy. First, look at your current bank or credit union. Many traditional, federally insured institutions now offer their own low-cost or completely free short-term liquidity options specifically designed to compete with fintech apps. Some credit unions offer small dollar loans with capped, reasonable interest rates and no hidden subscription fees. Many mainstream banks now offer fee-free overdraft buffers up to a certain amount, meaning if you go over by $20 or $50, they will cover it without charging you a penny, as long as your regular deposit arrives within a few days. That is a real banking safety net, backed by federal regulations, without giving your financial logins to a third-party app. Second, you must build a cash flow buffer within your own account that you control. I know it sounds difficult if money is tight right now, but you need to create your own FloatMe fund. Look at your budget with absolute honesty. Where can you cut back just a tiny bit for the next 3 months? Can you reduce a subscription, shop at a discount grocery store, or delay a non-essential purchase? Your goal is to accumulate just $100 to $200 of extra cushion that sits permanently in your checking account. That tiny cushion acts as a barrier between you and the temptation to use financial apps. If an unexpected bill comes up, you are drawing on your own money, not a technology platform that is waiting to debit your next check. Third, if you are looking into this because you want a safe online bank to hold your retirement savings or to manage your everyday money, do not look at cash advance apps. Look for established, direct online banks that offer high-yield savings accounts and totally free checking accounts. Look for names that are true banks, where your money is directly protected by the Federal Deposit Insurance Corporation up to $250,000. These legitimate online banking arms give you great interest rates on your savings, do not charge monthly maintenance fees, and do not try to trap you into subscription-based microloans. You have worked far too hard for far too long to let your peace of mind in retirement be chipped away by subscription fees, express transfer charges, and apps that view your bank account as a profit center. You need to be the master of your cash flow. True financial freedom in your golden years does not come from finding a faster way to borrow $50. It comes from having absolute control over every single dollar that enters and leaves your bank account. Take a stand for your money today. Say no to the tech shortcuts, build your own cash cushion, protect your banking information, and give yourself the secure, independent retirement that you deserve.